Well, good evening, everyone. Welcome back to the channel. Maybe not so good evening for a lot of us invested. The last three trading days in the market have been absolutely abysmal, and we may be headed for a recession, at least according to the current definitions we have of recessions. Of course, as the disclaimer should go, always subject to change. But anyway, it has been a rough one. There's been a lot of stories of margin calls. Um, Different brokers freezing accounts, lots of complaints with Schwab. So let's try to unpack what we can and go over, the implications for our dividend investing. So I know one thing: the margin requirements. When funds drop like they're dropping right now, the margin requirements, of course, are subject to change. I personally don't do margin, but in a worser market like where we are today, um, the margin requirements are most likely going to increase, which lead to more margin calls, or at least an increased likelihood of margin calls. So let's go review Seeking Alpha here, because we had the roughest day for the markets in the past like 2 years. Let's see. Let me share this one. Oh, here's a report of a margin call day. I had to cover 10,000 today. So, do you want to explain in the comments to the audience what that means, just in simple terms? So that was, I'm assuming that was your margin debt, and you had to cover that today or get called. Anyway, let me share Seeking Alpha while he's doing that. And this is going to be the topic of another video. I happen to leave this article up. Or maybe we can just go over this now. I have been promising this. Let's see. Mega versus MAGA. No, I'll save that for later. Okay, let's go over here. Let's, I was down like 3% in both accounts today. Let me go over here. So the futures, we're all up tomorrow, so we should just take credit for the upswing and ignore the downswing. Sound familiar? Yeah, see, the Dow is up 400, so we should just ignore what happened today and just say, look, the Dow has gained 1%. The S&P has gained 1.6%. The Nasdaq has gained 2%. Good time for TQQQs, by the way. And also, on the bright side, I think we're going to see that this is a great buying opportunity. But anyway, see, this is what happens when you cover stuff like after the trading has finished for the day. Um, we end up having to look up other stuff. So let's see, market today, because everything's just showing the futures. Today was 8/5 for another 10 minutes or so. Okay, let's see. We'll do this Wall Street Journal. Dow, S&P, Nasdaq slide amid global sell-off. Tech shares lead broad decline. So the big news: Japan's Nikkei average plunged 12%, which is the most since Black Monday in 1987. Okay, so he's got, let's see, 2-for-1 leverage. For every $1 I have invested, $2 in margin. Woo, that's rough. My equity's down 25% in 1 month. How about that? Okay, let's go over here to Wall Street Journal. I got this article up over here. It's been a rough last 5 weeks or so. Like I said, I'm struggling to make sense of things, truly. Um, I'm doing the best I can every day. So let's see. Since 1987, this was the highest drop for the Nikkei average. So here's the Dow, the S&P, and the Nasdaq. Everything opened today like in a straight line down, as you can see here. Okay, all three major indexes fell more than 2.5%, with the Nasdaq Composite leading losses and the Dow dropping more than 1,000 points. Stocks and Treasury yields paired declines after service sector data came in better than expected. Does that headline make any sense? Like, when you read that one time, I always feel like the geniuses that write these articles and the talking heads on TV, who are almost always behind the curve, by the way, they come up with shit like this. The service sector data came in better than expected. Does that even make any sense? Like, the market dropped, but service sector data came in better than expected. Then why'd the market drop, right? So what is this? I clicked this and solid services data. A better than expected report on U.S. service sector activity saw stock indexes and treasury yields pull back some declines. Oh, good. So it could have been worse, like they tell us all the time. If we didn't intervene, it could have been way worse. That's what we always hear. The Institute for Supply Management Services Activity Index for July rose to 51.4. That was up from 48.8% in June and higher than the 50.9 reading anticipated by economists polled by the Wall Street Journal. Then why the heck did the market drop? Like I'm just kind of looking at this, not, I don't pay attention to this stuff, like the economic indicators and stuff, as close as I used to. I used to kind of nerd out over all of this, but I empathize with like common folks. Like when I read a headline like that, I'm like, well, then why'd the market drop? If service sector data came in better than expected, then why is the market dropping, right? I mean, that seems like a normal human reaction, doesn't it? Okay, let's see. Turbulence started in Japan, where the Nikkei fell more than 12%. Worst one-day drop since the crash after Black Monday in 1987. And keep in mind, folks, Japan suffered from what they call a lost decade, the decade after. Losses cascaded across Europe and the US as investors dumped riskier assets. The declines extended what has been a dizzying few days on Wall Street, during which the year's most popular trades have been unwound. Here's a sentence I love. A sell off in tech shares continued Monday with Nvidia, Tesla, and Apple each falling at least 4%. The iPhone maker took an extra hit from news that Berkshire Hathaway had slashed its Apple stake. Concerns about a slowing U.S. economy are front and center after job growth slowed sharply in July. Investors are worried that the Federal Reserve has moved too slowly. We need to play catch up in cutting rates. So they could always do what they call an emergency rate cut. There is talk of that. From what I see with the jobs number, though, so the jobs number, we added 114,000 jobs in the month of, or the last month. So it was like whatever, 75,000 less than expected. That doesn't seem like a huge deal to me. I mean, a 4.2% unemployment rate is historically not bad. So let's see. The Dow dropped 1,034, Nasdaq slid 3.4%, S&P retreated 3%. The VIX notched its biggest intraday percentage gain ever. So how about SVOL? We haven't looked at that in a while, before paring back somewhat. Japanese stocks were amongst the hardest hit globally, with a tumble in SoftBank and bank stocks weighing. Elsewhere, South Korea's benchmark Kospi sank 8%. The yen leapt against the dollar. We got one more sentence here, then we got the "you're a bum, you're not a subscriber" to the Wall Street Journal. But most of you watching are subscribers to me. So any of you not subscribed, please do subscribe. It's free. Unlike the Wall Street Journal, it's free to subscribe to me. So keep that in mind. And it's free to join Discord as well. Okay, let's see what we got here. We got the chat blowing up here. Let's see here. I now currently have 86,000 of my own money invested, but 270,000 invested with all the margin. That seems really risky to you. Like, I was about to make a joke, but I don't want to be too offensive. Like, I see your picture here. Like, did the stress of that make you lose some hair? I mean, honestly, I've lost some hair over the market the last couple days. Um, Palantir earnings saved me from margin call, really. And all of it is in YieldMax funds plus clip. Interesting. Very interesting. I make 15,000-ish per month in dividends, pay 1,000 in interest. What? Okay, so you follow Kumair? Are you in his 15,000 club? I heard he got a nice margin call today. 1,000 in interest on the 190,000 in margin. See, I'm just stubborn. I want to avoid that. I pay my corporation 1460 per month for the money I borrowed to fund my investments. I need to set aside 2,000 a month for taxes. Be sure you set a lot aside for taxes, because you get busted on these funds. I had a nice letter come in from the IRS after I filed that I owed them even more money, and you all wouldn't believe what I actually pay in taxes. It would make your head spin. And those lovely people still wanted more money from me. So these funds are not tax efficient at all. Live off the rest, meaning live off dividends now, huh? I'm pretty leveraged, so finding 10K was tough. Budget hunter is taking a break from hunting budgets and commenting on my video. Coach, should we use margin to invest in YieldMax funds? Should we? It says absolutely. Signs point to yes. Although it is advanced equipment, I wouldn't take everything it says literally. Should I take loan against house? Let's see. This is, by the way, how I make most of my life decisions by asking the advanced equipment here. Um, let's see. It says without a doubt. There you go. Without a doubt. Love the ads. What ads? What ads? I don't see any. The drop. This drop was just a mini one. A mini one based on what's like compared to what's to come. Let's see here. Citizen of the Year next ETF to talk about is TDVI. What is that? Please do some research. Me? Research? Research what? Most of my research is pre-done up here. It's called knowing your stuff. What's this? You hungry for that one? What one? What? Did you change your picture? What's your picture now? I can't tell what it is. Tell me. Tell me what. Where's my mind? I don't know what you're talking about. You all are losing me here. I feel like I'm the focused one. You all are the ones with ADD. Okay, so where are we now? Let's see, 11 minutes here. Well, that's my insight today on the abysmal market. Of course, the media will tell you that things are great. Let's see, high yield dividend. Who's a high yield dividend warrior? I don't even want to look at my portfolio, honestly. Um, well, I got to end the video in like 2 minutes to get credit for the video today. So, wow, you all are blowing up the comments today. Tell me why. Okay, if you say so. If Tesla keeps dropping, Kathy Woods will never. Let me tickle her feet on the beach. Um, hey, she endorsed Trump, by the way. I bet the media has just about thrown her overboard. I mean, a lot of people already thought she was a nut, but I'm sure more people do now, right? Uh, why no? All right, well, we got big participation here. I guess this was the hot topic to do. Okay, so let's see. We talked about the market downturn. We talked about margin calls, implications. So, all right. So to end the video, the good news is that your dividends are guaranteed money, right? So then with the market dropping and stuff, at least within another week, we'll have some cash money and dividends coming in to play with. So, and yeah, just, like she says here, laugh everything off. Uh, Random question. Do you feel the YieldMax is going to be around for a while because it's what people want and that JP is making money? That's certainly an interesting question. I don't know. And absolutely, it's free money. It just grows on trees, right? Anyway, thank you all for tuning in. That's going to be it for now. Like, comment, subscribe, join Discord. They're all free to do. Speaking of free, and we will see you all tomorrow. Good night. Bye.